How's it going? Today is Friday, the 16th of February, 2024. And if you take a look at the XSP positions here, it's hovering near 50% of the total profit. And open it up here, and it's actually two different trades. But this 112-3 is now ready to come off. It's been on for 31 days, and this one's been on for 2 weeks, so it's kind of nice to just have these equally spaced. And yeah, this one's close enough to my profit target that I'm just going to take it off, put another one on, and then basically every 2 weeks I'm taking one off, putting it on, rinse and repeat, right? So if we take a look at the spreadsheet here, this one, 112-3, come across here. So it's at 23 cents right now. So, or $23, whatever. Put in 23, and then 86 minus 32, that's 54 bucks. So that's, I'm basically looking to make $50 on these defined risk trades. And yeah, that's above 50 bucks. So with that being said, let's try to get this closed here. Looks like it's bouncing around between 23 and 22. All right, perfect. Filled right at 23. Let's see, closed. You can see there, this one's closed. Oops. No, they won't highlight, but you can now see these are closed. And this remaining is going to be a free hedge. Let me put this into the spreadsheet real quick. Okay, got this put into the spreadsheet here, and row 6 is what I'm looking at. So is in this 31 days, opened it for credit of 66, closed it at 23. That gave $86 on that part of the trade. Assuming the other put spread closes at 0, I'd lose the full $32. So down here, that's 54 bucks. And I made a small miscalculation here, and I didn't look at the post fee profit. So I got 65% on that part of the trade there, but you add in the fees, and that ends up being $46.11 profit. So a little bit under my $50 target, but close enough. And just for curiosity's sake, you know, this opened at IV of 15.7, closed higher at 17.1, and opened at 476, 503, and this stock price went up $26.43. So now I have a winner of 46 bucks right there, and then I got another free hedge. So this is working out. You can see up here now, this is the free hedge left over. And then you can see up here at the top, this purple defined risk account is up $44.84 on the year. And that even includes, I had this SPY trade. I had, what I have, an Iron Condor in there. And that sucker lost me like 200 bucks. And I'm still up 45 bucks on the year. And it's gotta be because of these trades. They're the only other trades I've been putting on. So between the SPY 1122s and the XSP 1122s, I'm actually making money. So I guess we will find out if this trend continues. With that being said, I want to open another trade here. So 112-4, I need to go and do number 5. So XSP, gonna come here, and 120 days in theory, looks like we're at 126. And I'm gonna come down here to, I think it's the 25 is what I still go with on these. So I'm gonna buy a 1 point wide spread here, and then a 20 delta. You have to go much more aggressive on these defined risk. So then I'll go 5 point wide, sell, and then 2 of those. And down here you end up with a pop of 78% and a credit of $1.07. I want to get at least $1 because after fees and everything else is all said and done, you know, I'm trying to get about half of that, right? So 50 bucks out of 107. Let's see what I got on my previous trades here. Let's see what I got on this previous trade. Let's see, the total credit was 101. So yeah, this one's at 107, 109, 107. And it's at the 25, 20. What's the other ones? Where are these at? 23.19, 21.18, 21.18. Oh, but the spread that I buy is at the 30. That was at the 39. That was at the 48. Wow. I was really aggressive with those. So if I change that, then is that going to lower the price? Guess we'll find out. All right, bump this to the 30. Yeah, now I'm only getting $1.04 credit. However, the pop went up. Guess I'll bump this one more because so far the lowest I've done is a 21 delta. And then that gets 106, 78 pop. Guess in theory, if I'm trying to be conservative, I'd actually go down. Nope, 98, so that's not enough. So yeah, guess I'm gonna just stick with the 475, 470, and then 490, 489. So 1 point wide here that I'm buying, 5 points wide here that I'm selling, but there's 2. And in theory, that gives me $1.04, 78% pop. And it costs $796 in buying power. All right, let's get this filled. There we go. Had to go a couple ticks off the mid price. Looks like it got filled at 102. And there's the $2 I had to give up on the spread. I was hoping for 104, but I only got 102. All right, let me put this in the spreadsheet and I'll get back to you. Okay, so we got everything entered in here. 112-5, the last 2 rows here. And, you know, 126 days, open it today on the 16th. Sold 2, bought 1, and just entering in the fees, blah, blah, blah. All said and done, the $102 credit that I sold it for up here, right, ends up being only $94.08 after fees. Granted, I've thrown in the closing fees as well, but that's part of the trade. So $94.08 is the max profit. I'm going to be shooting for a little more than half of that at $50 or 46 like last time. Let's see, come over here. The short put spread was the 20 and 18 deltas. The long put spread was 30 and 29, 78% on both of those, just because I guess I'm not going to track it individually. I mean, this is actually like a 30%, but anyways, 16.7 IV rank, and it was at roughly $503 on the dot. Right now, it looks like it's dropped down about 25 cents since I opened that. So anyways, guess you can say this is working so far, but we'll see. The market has basically only gone up in the last, 3-4 months. So it'll be interesting to see what happens when these start to go against me on this defined risk account. I'm still super curious on how I can lose money. Nothing wins forever, even though supposedly this one kind of does. But actually, this is the 1122 versus the 112. Supposedly those have like almost never lost, according to some other YouTubers. But we'll see. I guess last thing here is to look at the curve now. Anything up in this range to the moon, I make $171. This is where the current 1122 gets the little bump. That's at expiration, I could make $271. And then this one is the free hedge I have. If we break these down here, this is what I just opened. So 102 is max profit. And then it comes down here. I could, in theory, make 202 at expiration. And then I guess if we do the reverse of that, this is the 1122-4. So the previous trade, right, it's already working. In theory, this one says 69 to the upside, but that's because it's skewed, because it's taking into account probably this one. Yeah, so it's taking into account the free hedge there. So in reality, I can make 101 if it stays up there, and then I think this is the free hedge. So this is what my one free hedge looks like. Yeah, just double check. This is the free hedge here. So, you know, it's got to fall, was it 490 to 502? So what is that? 10, 11, 12 points, whatever. So that's like 120 points if it falls, and then it'll start to make money somewhere in here. Actually, no, it claims it won't make money until way down here. Okay, so that's 475. It'd have to fall all the way down there. So if we take, let's say 503 minus 475, it's 28. So then 28 divided by 503, that's a 5.6 market correction. So if the market goes down 5.5%, this free hedge will start to kick in. And it seems like that's a reasonable thing that could happen here, but the market just keeps going up. And it's interesting to see here that, you know, I didn't do any hedging with this stuff, you know, and these trades are coming off as winners in roughly 30 days, where I was messing around with these hedges up here on this one, right? And I probably shouldn't. I don't know. I mean, that's cool to get like the, you know, Black Swan Hedge or whatever it's called. But the odds of that actually happening is pretty low, you know, like outside of like a COVID crash or the crash of 1987 or whatever. It's like the Black Swan Hedge is so far out of the money. I just don't see it ever really benefiting you. I don't know. Is it worth all that time in like 10 years to do all that work for one time to make an extra few $1,000s, you know? Even if it worked out in my favor, I think it would only make like $1,000 or something. But anyways, all let's say, been messing with hedges on here and I'm down money, where I'm not doing the hedges on here. Otherwise, you know, except for the free hedges, I'm not adding anything extra, and I'm up money. So take it for what it's worth, I guess. All right, I got to get going. Thanks for tuning in. I think this is a 3-day weekend coming up here, so don't try to trade on Monday. But all right, see you later.